Hey Big Bulls, welcome back to another fun episode of Bullseye. And today's episode we've got...
So we're going to talk about JSW Steel's rise to being world's most valuable steel maker. We are going to talk about why life insurance stocks are gaining ground and also a piece of good news for EV battery stocks.
Okay, so Saloni, let's start with JSW Steel. It's now the biggest player in the steel market globally. Its share price has hit an all-time high. Tell me a little bit about JSW.
Right. So let's go back to their story, right? It all started back in 1982 when JSW Group's first steel plant was set up in Vasant in Mumbai. And the project was led by Jindal Iron and Steel Company. And over the next 2 decades, the company obviously has, focused on new acquisitions and also expanding their capacity.
Right.
And the company also got listed in 2005 on the Indian stock exchanges, right? Mm-hmm. And all this has helped it become one of the top players, as you said, in the global steel industry. And along the way, they've also helped India becoming the second biggest market, that produces crude steel as well, right? Just after China. And fast forward to today is what, as you mentioned, it's officially become the world's most valuable steel maker as its market cap crossed around $30 billion on Tuesday, right? Mm-hmm. And just to put that in perspective, JSW Steel overtook US-based Nucor Corp, which had a market cap of $29 billion, and also other major steel makers such as ArcelorMittal from Europe and Japan's Nippon Steel, which are valued at around $27 billion, right? What's wild is that India has now 2 such companies that are part of the top 8 most valuable steel companies globally, the other being Tata Steel, of course.
Okay, so now you told me a little bit about the history of JSW Steel. Mm-hmm. Let's come to today. What is driving the stock price higher and higher to all-time highs?
Right. So, this week itself, the stock hit an all-time high, right? And the company, which pulls in most of its revenue from selling finished steel products, has had a proven growth and EBITDA trajectory as well, right? And analysts expect this growth to keep going, especially with the production numbers, those monthly production numbers that keep coming up, and they have been showing some steady growth as well as the company has been planning to increase its capacity as well. Mm-hmm. Along with this is, of course, the broad market rally this week that helped, right? And also the government support that has helped boost the stock sentiment as well. Now, just talking of this government support, there's a recent move to protect the domestic steel industry, right? The Indian government has recommended a 12% temporary safeguard duty on some steel products. The idea is to obviously protect those Indian steel makers from the cheap imports as well. And this comes after the US dropped a 25% tariff on steel and aluminium earlier in March, right? And we've covered in one of the previous episodes how the Trump tariffs affect the metal industry as well. So our viewers can check it out here. And this safeguard duty is still waiting for approval, but it is, of course, a move to protect the Indian steel makers from a potential flood of imports, right? So this includes JSW as well.
Got it. So good times for steel companies in India then.
That's true. So Nitin, if you look at a close look at life insurance stocks such as HDFC Life, SBI Life, and even LIC, if you look at the charts, you will notice that they have been on a pretty similar upward trend, especially since mid-March, right? It looks like they're trying to recoup from the losses that they have witnessed in the past 3 months, right? So what's happening there?
All right. So if you look at an ET analysis, they talk about something called the APE, or the annual premium equivalent growth.
Right.
And this is for FY25. They point out that this could be a key factor, the numbers that have come out. Now, if you ask what is APE, it is simply a measure of new business. So it takes policy premiums for the insurance industry, for companies as well, but also for the industry. Because there are single premiums that are paid out. Like when people buy a policy, it could be a single one-time payment, but there are also recurring premium payments that happen. So AP is a way to kind of bring some uniformity to understanding how the premiums are being paid. And when they look at this, in February, there was a nearly 10% growth in AP year on year for the industry, right? And private players were a big factor in that.
So when you mentioned private players, any particular stock that kind of stood out?
Yeah, so going back to Elara Securities in their report, they believe HDFC Life is a standout performer over here. And one primary reason for that is HDFC Life does not depend as much as the others on unit-linked insurance plans or ULIPs. So the problem that can happen with ULIPs is it's linked to the markets. So when the stock market is going through a rough patch, that affects ULIP performance and the revenues and everything else that insurance companies can make out of it. So that's what Elara Securities has essentially pointed out over here. So considering that, they figure that HDFC Life is going to be the standout performer, right? But you have to remember that competition in the industry is also heating up. The government has also announced 100% foreign investment, and that could affect the VNB or the value of new business margins across the board. That could put pressure on the companies. Now, what is VNB and how does it matter over here? Insurance is a long-term game, right? People are in it, they're not buying insurance today and getting rid of it, right? It's a longer-term holding period that you have for insurance. So with VNB, what happens is insurance companies essentially calculate what is the future profits discounted today that they're making out of the business that they're generating. And on that front, with competition, it could be a bit of a problem if the VNB turns out to be not as profitable as they say. And as a reporter from Macquarie put it, the competitive pressure will keep a tight grip on VNB margin and premium growth.
So looks like this rebound could be short-lived for now at least.
Could be, let's see. All right, so Saloni, there seems to be some good news for EV battery makers. Let's talk about that.
So we know that India has been laying a big, solid foundation on building up its EV ecosystem, right? And a big focus on that has been trying to localize the components that's been used to make these electric vehicles. And one of those is obviously the EV batteries, and these are made from the lithium-ion cells, right? Now the latest move to push the ecosystem further came from the Central Board of Direct Taxes, which recently expanded the safe harbor rules by raising the threshold for eligibility to 300 crore.
Okay, so what's the big deal? What does that mean?
Well, so these lithium-ion batteries that are used in electric and hybrid vehicles, right? They are now officially been recognized as core auto components under these rules, and it is a sign of relief and joy for EV battery makers, because with this new categorization, they are eligible for those tax breaks and also other financial perks. Given this will obviously give the big push to the sector as well.
Right. Saloni, you mentioned safe harbor. Tell me what exactly are safe harbor rules in this context?
Right. So these rules, they let businesses avoid detailed tax checks sent by the income tax department, right? If they follow certain pricing guidelines while dealing with related entities as well. And think of these rules as a guidebook, where the income tax department is telling them, that this is the sweet spot for pricing and also profit margins. So you stick to this and we won't bother you too much, right? So, and this threshold that we spoke about, that basically means like a limit or a benchmark that businesses need to meet or fall within to benefit from these safe harbor practices as well, right? And by classifying manufactured lithium batteries as an auto component under this rule, the move is expected to reduce tax-related duties for imports as well.
So it looks like it is this piece of news that sends stocks like Amara Raja and Exide Industries up by 5% in a single day.
Right, because if you talk about Amara Raja batteries, it's one of those top manufacturers and suppliers of batteries in the country, and they also have been working on the EV segment as well, right? Especially with lithium-ion cells. And also Exide Industries is another player which is a battery manufacturer, but it's trying to expand its reach in the EV market as well.
Right. So India and the government is focusing on the EV ecosystem. And that's probably going to be a shot in the arm for all investors looking to have a long-term bet in this sector.
Looks like that.
All right, so that's a wrap on this week's edition of Bullseye. We hope you have enjoyed this episode. If you have, don't forget to hit that like button, share it with your friends, and also hit that bell icon so that you know when the next episode drops. We'll see you next Thursday.